obviously is like going to the races, because things are so volatile, things are so dynamic, things are changing so rapidly, and at the same time we don't know what is going to happen, because all of us will admit that this is a once in a lifetime or a once in a century kind of an event which we are facing. At least in all our lifetimes, we would have not seen the kind of uncertainty, the kind of scare which we are seeing right now. What we read and what we hear is that 1918, which is when the Spanish flu epidemic happened, that was the last time when we had anything close to what we are seeing now. And to that extent, I think this is a new sort of an experience for all of us, and not a very pleasant one. The other thing is that in markets over the last 20 years, we have seen many times, or quite a few times, when the markets have corrected, quite significantly. Even in 2013, we had a big correction. 2016, we had a big correction. Obviously, 2008-9, we had Nifty, which fell by almost 60% post the financial crisis in the US and the Lehman crisis. And even before that, whether you take 2001 to 2003, where we had global recession, and again at that point of time, the Indian indices fell by over 50%. However, what we are seeing now is the scale might be lower than what we have seen last time. Indices have fallen 30-35%. However, the speed has been unprecedented. And at the same time, we are also facing not only uncertainty about the economy and the financial markets, but also about our own well-being and health. And I think that is what is basically scaring all of us, and also creating uncertainty about what is going to happen. So never in our history we have seen a complete lockdown of the entire economy for now over a month. And at least there is another 2 weeks to go. And this is not only in India, this is globally. So a few countries might have 100% lockdown, few might have 80% lockdown, few might have slightly lower. But the thing to basically analyze and remember is that almost every country is going through a complete or a partial lockdown as far as their economy is concerned. And I think this is the first time we are having this scenario. What it also does is that it creates, apprehensions, uncertainties. There is an uncertainty of when this lockdown is going to happen, and I'll address it a little later. And it also creates an uncertainty about the size of the damage which it can do to the entire global economy, the economy of India, and then coming down to companies, and then the general population of the country and the residents of the country. I think in this whole mayhem, what we are right now seeing is that the number of patients increased by almost 80,000 a day, number of deaths almost 6,000 to 7,000 a day. And though the pace has been not rising, particularly in Europe and recently even in the US, I think we are still seeing a good number of patients which are getting infected. There are multiple views coming in. I would say even my view is that we cannot have a complete lockdown for long. We need to open up. And I think similar kind of views are coming from other countries also. So there are countries like Sweden, which never had a lockdown, or Belgium, or even to some extent Japan. And now there are countries which have partially opened up, like India has partially opened up, Germany has partially opened up. US is talking about opening up of their economy over the next week or 2 weeks. And, the whole logic is that, yes, this virus is still contagious. We still don't have a vaccine. We still don't have an antidote or a drug which, specifically cures it. But at the same time, if we let this to drift, then more people will die because of economic downturn than this virus itself. And it's a fact, because if you see the numbers of unemployment registered in the US, even yesterday you had a 4.4 million new registrations, which means that almost 26 million people in the US have now claimed unemployment benefits. This is almost 17-18% of their working population. So, almost 20% of the working population in the US is already filed for unemployment. And you can see, the scale of it. Even in India, though the government has mandated that salaries should not stop, our view is that beyond April, it is going to be increasingly difficult for corporates, for enterprises to keep on paying salary to the entire working population. And I think that is going to lead to increased stress. So more or less, most countries have started to believe that you have to have a partial to a full opening up in the next few weeks, because otherwise it will be too late. From an India perspective, the number of cases are also increasing. We had 2-3 good days, but yesterday again we had 1,600 cases, and today also the trend is not that great. Though the doubling of cases have slowed down to 7.5 days, I think if we are able to elongate this cycle to maybe doubling every 10 days, then we can look at a more faster opening up of the economy. Otherwise, it is going to be a challenging task. And specifically for India and some of the other poorer countries, which have dense population and which also have a lot of these small houses or slums, I think the chances of community transmission to that extent increased quite dramatically. And if you note, in India, 30-35% of the cases are because of one congregation, which led to almost 3,000-5,000 cases additional which were reported. And I think that community transmission scare is on. Among all this, there are some positives. One is almost 70 companies are doing research on vaccines. There is one Indian company based in Pune which has come out and said that they would have a vaccine ready in days. Now, we don't know. Let's see how it works out. There are a lot of medicines which are being tested. So along with the well-known HCQ, there are few other medicines which are being tested on patients, and hopefully there would be something which will come out at least which slows down or which aids in the recovery. Another thing is there are conflicting reports which keep on coming in. There are some research papers which say that one is the hot weather is definitely slowing down and has the potential of slowing down the spread of virus. Second is, Indians by nature are a little bit more immune because we have always been exposed to malaria and typhoid and various kind of flus. And third is because of the BCG vaccines and all, which is compulsory in India, our body is a little bit more immune to such kind of flus. In fact, yesterday I was seeing on CNN, and there was one doctor who also said that polio drops can increase your immunity. And luckily, India has had one of the most widespread polio projects in the world, and all of us have at some point of the time been administered polio vaccine through the oral drops. There are other positives coming in. I think the experience of Belgium in allowing herd sort of immunity seems to have been working. It's still early days. So what this herd immunity is that, you keep on working normally, people will get this infection, but the mortality rate would be like in decimals. It will be like 0.2, 0.3%, which is normal compared to some of the other flu and influenza. And as people get cured, the body and the antibodies will start to develop immunity. And I think most of the world will eventually have to move towards it if we have to keep the economic engine working. In short, I think this is a pandemic which has in the recent times we have never had a pandemic which is so widespread. Almost 200 countries in the world have at least one patient, and which is so contagious that it spreads so rapidly. It's just a sneeze and you can have multiple patients being infested by one patient who is suffering from that disease. On the economic front, as I said, at least I expect that a gradual opening up of the world economy will start maybe first or second week of May. Even in India, we have seen some opening up from April 20th. It's been slow, but come May 4th, I would expect more opening up of the economic activity. One thing we have to be very clear that even after the economic activity opens up, the way of working is going to change. Manufacturing companies will have to spend extra on transportation of workers because they would not have crowded buses, and they might have to even make arrangements for the workers to stay in their premises. Logistics wise, they will have to take care. So I think at least for the first quarter, we don't expect companies on a quarterly basis to operate beyond 25 to 40% capacity utilization, because April is as good as zero. May might work at 25-30% capacity, and by June maybe 35-40%, 50% capacity utilization might happen. However, when we speak to companies, and work from home has given us enough time to make like 8-10 calls at least a day to various corporates across sectors. One thing which the companies are saying is that even if we start manufacturing, till the logistics are in place, till the markets are in place, we are not going to be able to sell our goods. And if you're not able to sell our goods, then what is the use of producing? So I was speaking to one company which is into cement manufacturing. It says, even if you make cement, real estate construction is shut down. Government construction in some places has just started from April 20th. Retail markets are shut down. So what is the use of even manufacturing and keeping? So I think that's why I said from May 4th, we expect even the markets to start to open up, and I mean the wholesale markets and the retail markets. Otherwise, it is not going to open up in terms of the economy. In terms of other changes in habit, I think all of us are now very cautious. When we go into an elevator and there are 3-4 people, we try to keep distance. We are always apprehensive about whom we are moving around with. We try to maintain social distance. And when we start our normal life, even after partial or full opening, I think this nature or this behavior is going to haunt us, at least for a few months. So my view is that all of us would tend to avoid busy places. Maybe we will not like to go to malls. Maybe we will not like to go to see a movie, to see a play. We will not like to travel in an airplane unless it is very necessary. So, holiday is, I think, a far-fetched thing. Going to a restaurant might not be the best idea because, somewhere in our mind, we will have an overbearing sort of fear about contracting this virus. So I think the habits will change. The other thing is, I think this work from home is now going to stay. And over the last 3-4 weeks, all of us have in part or full realized that there are a lot of things we can manage by working from home. And despite that, maintain the efficiency. In fact, I would say that I have become more efficient because I have stopped wasting 2 hours commuting. When you go to the office, a lot of time gets wasted in inconsequential meetings, in having tea, gossiping with your colleagues, some friends. And I think maybe, even after it opens up, people might say that, okay, 1 or 2 days a week, all the employees can work from home, because that is the only way we will reduce the traffic, we will reduce, the crowd, and we'll come back to normal behavior. From a market perspective, we saw the market correct very sharply globally towards the mid and third week of March. Even in India, the Nifty fell below 8,000 levels briefly. I think April, last 1 month, particularly May 25th, when we made the bottom to today, been a decent month for the markets globally. US markets have obviously done the best because their government has been very proactive in supporting the economy, and I'll come to where India could have done more and maybe can do more. India has also bounced back to around 90 to 9300 levels. Combination of a few sectors like pharma doing very well, some bounce back in financials, though they continue to be the weaker link. And obviously the market leader, Reliance, which has moved up almost 55-60% from the bottom it made on March 25th of 900 rupees. My view on the market again is one that we have seen the bottom. I don't see the markets going below 8,000 in a hurry. At the same time, I don't have a view of markets going beyond 9,500 in a hurry too. And I've been having this view for the last 15-20 days. My fair value for the Nifty at this point of time would be anywhere between 8,500 to 9,500, at least for the next 1 month, till we get clarity on how the virus is behaving and how the global economy is opening up. I think we will have bouts of Nifty moving up and down 100, 200 points. The good thing is volatility from 500 points every day has reduced to maybe 100, 150 points a day, which is good because it lends stability to the market. It allows people who want to buy, gives them confidence. At the same time, those who want to sell are able to get out because there are buyers at all levels. And I think this is the trend which we are going to basically see, at least as I said, for the next 1 month, month and a half. From a economy perspective, I think first quarter is definitely gone. We are in India looking at really challenging times. One is the revenue is not going to be there at all because the complete economic activity has been shut down. Second is obviously, from a government perspective, maybe more has to be done. We saw the first stimulus which the government gave of $25 billion, which was more a social stimulus. So 1,75,000 crores was allotted to ensuring that every citizen of India gets food to eat and some money in the bank. Then the RBI had a liquidity stimulus of 3,75,000 crores, the first stimulus, where they reduced the interest rates to the lowest ever. They reduced the ratios, the CRRs and the SLRs, which the banks had to keep. And I think that has had an impact. Banks' excess liquidity with RBI is almost 6 lakh crores, and the RBI then came out with another 1 lakh crore, where they opened up LTRO for the NBFCs also. However, the problem is that the banks are flush with liquidity, but the scare, fear, and lack of confidence is so high that banks are not in a mood to support either the NBFCs or the corporates or anyone else. And as a result of which, we are seeing what we are seeing even from an NBFC's perspective. Obviously, yesterday's event about one mutual fund shutting down a few schemes of theirs have only added to the concern, fear, and that was clearly visible in the price movements of the financials on the equity side. From the government perspective, I think two types of stimulus are needed very urgently, and it's high time. When a patient has fever, you can give the patient a crocin and expect the patient to recover in 2, 3, 4 days. But the patient, which is the Indian economy right now, is in ICU. And, this small crocins and, antibiotics of $25 billion of stimulus and $50 billion of liquidity is not going to help. We need steroids, we need operations to be done. And I think a large economic / industrial stimulus is something which we need very fast. And it has to be a large stimulus. Just to give you a perspective, US has already pumped in $3.5 trillion, and they're ready to pump in another $1 trillion more. Their fiscal deficit, which had fallen to 9% post-Lehman and come back to 3%, is expected to fall to 18% after the support to coronavirus. 18% fiscal deficit. And in India, we have a fiscal deficit of 3.25%, 3.5%, and we are doing nothing about it. पेशेंट मरने के बाद में आप कितना भी उसको दवाई दे दो, कुछ उसका कुछ यूज नहीं है. I think you have to give that stimulus now when the patient can revive, even though the patient is in stimulus. And we have the wherewithal, and I'll come to that. And I think the second stimulus needed is for the financial markets. And because I am predominantly an equity person, I'll speak about the equity market stimulus. I think no one has any long-term capital gain. Even if they come and say that for 1 year there is no long-term capital gain, the government is not going to lose any revenue, but it will be a great feel-good factor. We have this stupid super rich tax that can be rolled back. We have taxes on buybacks and taxes on dividends. I think at this period of time, we need the market to get a lot of comfort. Those can be rolled back. And there's also this rule that between two buybacks, you have to have 1 year gap. I think that can be sort of liberalized, because there are companies who might have done buyback maybe in September, and they want to do a buyback again, but they can't do it because 1 year will get over only in September. Or this also, the government doesn't lose anything. I think the question mark or the confusion is that the finance minister has been completely absent, except for the day when she came to announce this 25 billion measure for the poor people. There has been zero statements, and that is what is causing industrialists, market participants, economists, a little bit of concern. A prominent industrialist, Rajiv Bajaj, has come on media and clearly said that we don't need any financial support. We need governance support. And I think that is what hopefully we are hearing again, that maybe over the weekend there might be something which might come up. We are optimistic people, so let us see how it works out. From a corporate perspective, first quarter is going to be very, very stressful. The first 15 days of lockdown and shutdown, everyone was in obviously a precautionary mood. At the same time, it was the first time in our lives that we got 15 days off, and so we were also having to some extent an enjoyable time. People were learning to sing, to play something, to cook food, and even to sweep the floors, and it was fun. But I think now people are realizing that life cannot go on like this. We need some economic activity, we need income. Otherwise, each one of us would also have to fire people, and which is the worst thing to do, because unemployment around and I would say poverty around is not the best thing which anyone would like. So the companies also, when we speak to them, are a little confused. No one knows what is going to happen. In fact, they ask us more than we are able to ask them. As I said, companies have been getting permission to start manufacturing operations. Most of the companies are preparing to start the operations, but till the sales and the logistics is worked out, manufacturing operations are not going to start in a full-fledged manner. And I think that is where, to some extent, this March 20th partial relaxation might help, but more relaxation needs to be done. So I was speaking to a garment manufacturer, and he said that, we can manufacture, but if the markets are going to be shut, no one is going to buy our garments. So what is the use of just blocking further money in inventories? So I think that is going to be a concern. So as I said earlier, April is a washout. May maybe 25-30% capacity utilization we can operate in, and June might be 40-50%. But for the whole economy to come back on track, maybe August or September might be the month, and that also would require a little bit of bold decisions from the government to at least ensure a significant opening up from May 4th, while taking proper precautions. Obviously, big cities like Bombay, Delhi, which have slums, which have huge concentration of population, you will have to have demarcated zones where you still have lockdowns. But beyond that, you will have to start opening up. From a sector perspective, I mentioned to you earlier that some sectors are going to see pain for a longer period of time. At least when I look at myself, I don't see myself going for a movie for at least 3-4 months, going to a mall, which is very crowded, going to a restaurant, going on a holiday, traveling as much as I used to. And I think this is very clear that all these sectors are therefore going to bear the brunt of the pain. Also, our habits would change. I would say that discretionary spending is going to take a backseat. Anything to do with luxury buying and jewelry and anything to do with brands is going to obviously see a big slowdown. There are going to be rules introduced by the government to prevent large gathering socially. So maybe even if you want to have a marriage in your family, the government might come out with a rule which says that not more than 50 people or not more than 100 can be invited. And I think to that extent, again, spending on all these luxury kind of products might be impacted, and one should stay away from that. The collateral damage to all this is that even real estate and retail is going to take a beating. On the real estate front, obviously there are going to be job losses. The propensity for people to look at buying a new house is going to reduce. There might be some defaults, for people who have already booked, and to that extent, even the real estate guys might be hit. This work from home, as I said, is real. And when I speak to a few companies, all of them unanimously say that they have to cut down on their expenses, and a large portion of their expenses is rent. So one is all of them would try to renegotiate their rent downwards. And some of these companies, or a lot of these companies, would also look at reducing the square feet area which they use. If a company was using 30,000 square feet, a company might say that, now I'll use only 20 or 22,000 square feet and work in rotation where 25% of my people work from home. Or maybe, reduce the strength also by 20-25%. So I think that is going to again put pressure on the commercial real estate, which was doing well. And again, the ancillary impact of that would be on developers and then to the financiers of that. The other area where I think there is going to be a massive change, and which can be positive for telecom companies, is the propensity to use data. So I think we all know now how important data is. I would say that it is the biggest consumption item for all of us. The moment we get up, the first thing we do is pick up our phone. And before sleeping, the last thing we consume is again data. We see our phone for one last time and then go to sleep. And I think in this shutdown, we have started consuming it more. See, right now we are conversing because of data. We are all used to now video conference calls. We are now used to, working from home and looking at the markets using data from our home. We are consuming a lot of data, seeing Netflix and Amazon Prime and Hotstar and so on and so forth. So I think data and telecom might be a positive sector to look at. At the same time, as I mentioned earlier, multiplexes, theaters might be on the negative side of it. Banks, again, might face challenges, and NBFCs definitely will face challenges. And we have already seen the major impact of what has happened come on the financials. I think in financials, maybe banks which have a good brand name might eventually benefit, because what has happened in this risk averseness, and also after what has happened to the mutual fund announcement yesterday, people would now look at risk off, and whatever surplus funds which investors have would be again parked in decent banks, which will lead to them having a good base once economy revives. I think in all this mess, a couple of things which have happened good for the country and for some sectors. One is, the small savings interest rates have been reduced by 1.5%, which means that the bank's liability rates will go down. Savings rate by State Bank has already been reduced to 2.75%. We are already seeing FD rates and all come down quite dramatically. The world has pumped in almost $6-7 trillion. Globally, interest rates are almost zero. So once this corona scare and issue subsides, there is going to be tons and tons of money, and this is free money, this is helicopter money, which will be available to go into risk assets. And I think that is something which happened post 2008-9 also. That is something which happened post 2001 to 3 also. And there is no reason to believe that this cannot happen again. So I think that one has to take into account. The second is oil is gone decisively below $25. It's at $22. Briefly, it touched a negative rate also. But I think even if oil hovers between $25 to $35, as a country, we save almost $50 billion. And that, more than takes care of all the stimulus which the government is giving. So I think that again gives a lot of strength to the government and the country to pump in stimulus, and that is what we are hoping for. The other thing is there is a move of treating China as the villain in all this. So even before the coronavirus happened, US and China were at loggerheads, and they had trade wars, and there was already a move to move some manufacturing away from China. I think after this coronavirus, there are news reports and films which come in, which clearly say that China has been the country responsible, and it was done to benefit themselves, as China is coming out one of the strongest post-corona. And there are now articles coming in of how companies want to move their manufacturing away from China. A few examples, Japanese government is offering incentives to their companies if they move manufacturing away from China. There are South Korean companies which 100% relied on China, or predominantly relied on China for their outsourcing. They are now looking at increasingly at India. And there was a news report, a couple of days back, which talked about 100 multinational companies, I think 1,000 multinational companies, which are in some way looking at India as a alternate manufacturing source. Obviously, the news of $6 billion of investment from Facebook into an Indian company has brought India into the limelight as far as global investment is concerned. Just to give you a perspective, it is the largest investment by Facebook post WhatsApp acquisition, and they chose India to do it. So I think it clearly shows the long-term attractiveness of India as a destination. However, long-term everything looks good, but long-term will be good if we survive the near term and the medium term. And I think that is where we need a big economic stimulus from the government. From a market perspective, I would say if you're already invested, don't be in a hurry to sell off. But if you are looking at investing, don't expect a V-shaped recovery. As I said earlier, at least for the next 4 or 5 weeks, I expect the market to hover between the 8,500 to 9,500 range, unless some big news on corona, both on the positive and the negative side, comes up. Fundamentally, we are going to be in a challenging environment. First quarter, be prepared to see losses from almost 80-90% companies. Second quarter, hopefully things will start to get better. But I think once we clear that hump, the second half might be a great half, because one, there will be a pent-up demand. As I said earlier, money would be available in plenty at cheap rates, and you will have a low base effect, so that will also help. From the perspective of the mutual fund flows, particularly post this Templeton debt schemes, I think yes, investors have got a little jittery. Because what it does is that investors who had this 26,000 crores invested in the schemes would see their money getting blocked as and when the fund is able to liquidate the underlying securities. The investors will keep on getting money, but it has shaken the confidence of the investors, and there might be a possibility of redemptions happening definitely in other mutual fund debt scheme, but maybe to some extent even some equity schemes. So far, the SIPs have been going on well, but again, there are news flows coming in that it might slow down. From a foreign investor's perspective, what happened was in the first 3 months of the year, foreigners redeemed almost $100 billion from emerging markets. And that was a record. Even in 2008-9, they did not have this kind of redemptions. And obviously, because of that, India saw almost 70,000 crores of selling in the first 3 months. This redemptions have slowed down dramatically. So from $100 billion in the first 3 months, in the first 20 days of April, that number has gone down to $7 billion. And that is the reason why you are also seeing sales from FIs in India slowing down dramatically. There are some technical positives for India. Both FTSE and MSCI, the two major indices in the world, are in stages of increasing the weightage of India, and that might lead to a passive flow of almost $6 to $7 billion in Indian equities in May and June, and that can provide some support to the markets. But as I said, you will have bouts of markets going up and down. But my view is that the range would be 8,500 to 9,500 till some news on the corona virus comes in. In terms of our preference, frankly, pharma continues to be a great sector, but prices have run up too fast. However, I will still be positive on reactions. Please do look at this sector. Chemicals, again, good sector, but I would at this prices prefer pharma over chemicals because, the quality of the companies are much better, much, I would say, structural. Financials are going to give you, nightmares also because of the huge volatility they have. But larger banks on any price closer to the lows which we saw towards the end of March would be great prices to get in. And at least large banks like ICICI, Axis, HDFC, even Kotak, at some price might become interesting. Metals right now we are avoiding because we saw what happened with oil. Again, the price of metals globally are dependent on what China does and how China behaves. And frankly, we don't know what is going to happen there. So it is at best right now being avoided. I think, so this is a short synopsis of my view. Nirav, how do you want to do it? I think we can open the floor now for a few questions.
Yeah, Sunil bhai, just take Vinod, who was first on the queue. Yeah, Vinod, you may ask your question to Sunil bhai. Vinod?
Hello?
Yeah, Vinod, please continue.
What do you think this Franklin winding up funds?
I can't hear. You have to unmute. You have to unmute first.
No, I have unmuted him.
No, yeah, now he's unmuting himself. Yeah. No.
Hello?
Vinod?
Hello?
2, 3 Vinods. I don't know which Vinod you're talking about.
Just single Vinod. Yeah, Vinod, you can ask your question. Okay, Sunil, his question is, what do you think is the effect of Franklin winding up of funds on the market?
So I just touched upon it. I think it has been a little bit of dampener from a sentiment perspective. Investors who had invested in the debt funds will see their money blocked, and it would lead to some redemptions from other funds also. In fact, there might be a small rub-off effect even in equity funds because retail always starts to feel that mutual funds have suddenly become a little bit risky. So you will see some redemptions there.
Yeah, we have already seen that today from the flow of redemption orders. Yeah. So next we have Mr. N. Ramaswamy. Yeah, Mr. Ramaswamy. Mr. Ramaswamy. Okay, Sunil, his question is, could you rule out any redemption run on equity schemes of AMCs of mutual fund, what if such a scenario happens? Debt and ultra liquid, you have seen every account rushing and redemption.
Again, we just spoke about it. I think there might be a small redemption. I don't think there is going to be a massive redemption, frankly. Investors have become a little bit more matured. And as far as liquid and money market funds are concerned, I don't think there is any problem there, because by nature, the assets they own are short duration assets.
Next is Mr. Nirmal.
Yes, sir. Sunil sir, good evening, and thanks for your thought process that you shared. So I want to ask, what do you think, sir? It's a solvency issue, which is a lot of people are not able to see because worst is yet to come, things will open up and then we'll come to know. Or this is a liquidity, definitely liquidity crisis there. So you see a lot of defaults, or you see, although no one knows it, but you see a major problems coming up in terms of solvency in the corporates, mid corporates, or even small. So we know MSME has a lot of problems. So what is your view on that?
So Nirmal, it's an excellent question. See, what happens is that solvency and liquidity go hand in hand. A company might be very solvent, have the best intentions, have the best management, but if temporarily liquidity is not available to that company, even a good company might default. And I think that is where we need this government to support in a big way. I think RBI is trying to do a lot of things. They introduced this concept of LTRO even for NBFCs. But yesterday, out of the 25,000 crores which was offered, banks refused to even bid for more than half of it. So I think, the liquidity will solve the near-term problem. And I think that is what the US Fed and a lot of other central banks are doing, in a massive and a great way. I mentioned earlier that US has already pumped in $3.5 trillion, and they are willing to pump in more. Their fiscal deficit is expected to go beyond 15-16%. I think it's high time that even the Indian government came and said that, okay, this time we don't care even if the fiscal deficit becomes 5%, but we are going to see in a full manner the near-term liquidity needs. And I think that would prevent what you are basically worried about, which is credit defaults. So in the near term, the defaults will not be there. There is a 3-month moratorium. But I think if liquidity is available in abundance, then as an economy, we will bounce back faster.
Sunil, the next question is from Hansal Thakkar.
Yeah, hi sir. Thank you for spending time with us. I was just wondering, sir, given the lack of earnings visibility, what is your framework for company valuations, and has your investment checklist changed at all?
No, I think, investment checklist is very dynamic. You can't have a fixed investment checklist. Otherwise, you will be stuck with your portfolio time and again. And, howsoever great your investment history might be and your checklist might be, you will end up making new mistakes. I think that is what markets are all about. But I think what we are trying to do is, one, as I said earlier, which are the structural sectors which might be impacted. So, for example, entertainment was supposed to be the sunrise sector, particularly multiplexes, eating out, and so on and so forth. But times have changed. People will be a little bit wary of going out. So you have to be very clear about what you're getting in. At the same time, as I mentioned earlier, data might become a very interesting aspect to it. And some of these companies might not have profit right now, but they will end up making a lot of profit. Example is Netflix or even Amazon, which took some time, but now they are, in a very, very sweet spot. But one thing which we are trying to do at this point of time is obviously look at sectors where, debt equity is very low. And another thing is where fixed cost as a percentage of total cost is low. Because as I mentioned earlier, the first quarter, a lot of companies would at best work at 25, 30, 40% capacity utilization. And in this kind of a scenario, if you are having a very high fixed cost, then you are in for disaster. And even September quarter is not going to be 100% capacity utilization. Maybe it might be 50-60% capacity utilization. So I think look at sectors where the fixed cost is lower, and where debt equity is lower. I think rest, frankly, it is early days. As I said earlier, even when we speak to companies, even when we speak to some external agencies, it's still early days. No one knows what is going to happen, because we've just been 2-3 days since there have been a partial opening up, and in large cities there's been zero opening up. If you go to Bombay, Delhi, Jaipur, so many other cities, there has been zero opening up. So it's still early days. I would say that don't be in a hurry. Take another 10-15 days, before you have a proper list of stocks which you want to own.
Great. Thank you, sir.
And we have Rushabh next. Mr. Rushabh. Okay, we have Mr. Ashok Ajmera next.
Yeah, hi. Sunil, how are you?
Good. Boliye, Ashok ji.
Good. Nice to hear you after a long time.
Yeah.
You said, like the range could be 8,500 to 9,500 for some time. You also said that there is an uncertainty for next maybe 4 or 5 weeks till we get the clarity about the lockdown and other things. In my view, if the range is so small, or even if 8,000 or 7,500 again, but the upside is kind of unlimited, because this is not something which is going to remain forever. Maybe a month or 2 or 3 months, or maybe less production for some time of 3, 4, 5. But the great companies, they have debt-free companies, lot of cash with them, availability, product is good, market size is good. So according to you, can we not advise the real hard investors, who are looking for, from the point of view of 2 to 3 years or 5 years point of view, to start picking up these great companies, maybe 20, 30 companies, because the downside may be, according to even you also, 15, 20%, 10% or so, but the upside can be 50% or 100%.
I would agree with that, and I would say that for the next 4 or 5 weeks, it would be a great opportunity to gradually build up a portfolio, because at least my view, which I reiterated earlier also, is of a range bound market of 8,500 to 9,500 with a lot of volatility. So I even mentioned that some of the larger well-run banks, if they come back maybe 10-15% lower from what they are today, might be great 3-4 year opportunities. At the same time, we have to remember one thing, is that we don't know how this event is going to end. We are all optimistic people, and we believe that in the next 1-2 months there will be some solution, things will open up. But what if things go bad from here? The economy might get delayed opening up by another 3-4 months, and that would mean that a lot of companies might not survive. So I think obviously, as equity investor, one has to be optimistic. Otherwise, you should not be an equity investor. But we have to balance the two. So if you are not invested, luckily you have a lot of cash. Maybe gradually start investing over the next 3, 4, 5 weeks.
Okay.
और उसमें भी अगर good news आ जाता है, अगर लगता है कि नहीं, some medicine is near, so you might increase the pace. And if you think, no, it's getting worse, maybe instead of 4 weeks, you take 6 weeks.
And just one point which you also touched upon, that the government will have to think of some very, very big stimulus or packages, like what is happening around in the world also. What is stopping the government? I mean, everyone is talking for last 15-20 days, 10-15 days. Most of the experts are also advising them, don't worry about the fiscal deficit or this thing. And as you said, you cannot make a dead man alive. So what, according to you, must be stopping them to come out with at least 8-10 lakh crore rupees packages to just distribute money to the people who need it today? The bad debt may not be more than 1-2% or 3%, even if they give it unsecured loans.
I have no answer to that, frankly. And I would say that the biggest of biggest industrialists and the economists have no answer to that.
We have Mr. Rushabh next. Mr.
Yeah.
Rishabh.
Yeah. Hi, Mr. Singhania. I am Rushabh Share Dalal from Pravin Ratilal Share and Stock Brokers.
Yeah,
You know, a couple of months back, your company Abacus had a report where they talked about, you know, the excessive valuations of companies and why money is parked in only a few companies. You know, I happened to read it and I was very much in agreement with that. Now, just taking that forward, I I want to know your views on what do you think of the PSU sector, wherein, you know, some companies, their dividend yields are even higher than the bond yield. So do you see some companies where, you know, there are opportunities in the PSU?
So one, on the bubble in quality, I still stand with it. My view is that, a company's valuation depends on the future profits. And for a lot of companies in India, predominantly in the consumption side, valuations were very high. In some companies, valuations have corrected, but some companies continue to be very, very high. The classic example is that, Hindustan Lever is now trading at $80 billion market cap, maybe 75 PE, and it clearly declared in the parents' report that India degrew in the quarter of March. So obviously June quarter is also going to be lower. So I personally do believe that there is still a lot of bubble in quality, and it's not that, stocks don't correct. I think Maruti was a quality company. From 10,000 it fell to 4,000. Bajaj Finance, no one can deny, is a quality company. It has fallen more than State Bank of India. From 4,500 it's down to 1,900. And there are other examples of Page Industries and Eicher and even some other companies like Marico and so on and so forth. So I still continue that a lot of these consumption companies are overvalued. On our other question of PSUs, I would not touch them, frankly. And there are reasons to it. One is, a big component of we have only one PSU bank in our portfolio, luckily. The basic contours of research is that management has to be good. And PSU management is government. I think what they have done over the past few years is one PSU buys the other PSU to fulfill the target of the government disinvestment, as a result of which cash-rich PSUs like ONGC and NTPC and others have now become net debt companies. Second is, a lot of these PSUs are also in commodity businesses. And obviously when commodities have fallen the way they have, whether it's oil companies or metal companies, we have seen a valuation take a beating. Third is, I think in terms of trying to be ahead in terms of technology, in terms of practices, Indian PSUs have lagged big time. And that is clearly reflected across the public sector undertakings. So I think, yes, you are right that there are some PSUs which are trading at high dividend yields, but that dividend yield is based on the past performances. Whether the same profit will continue in going forward, one has to be clear about. If not, then, you will be in for a disaster. But, when good managed private sector companies are also available at decent valuation, why should you look at some of these? Maybe they can only be trades, frankly. I don't see them being long-term investments.
Okay.
Yeah.
Thank you.
Do we have time for one or two questions more, or we wrap it up?
Sure.
Okay, Mr. Dawal.
Hello.
Yeah, Mr. Dawal, you can continue.
Yeah, good evening, sir. I have one question. Basically, now after this COVID issue, everybody will look to China on the suspicious way. So on the India front, do we have an opportunity? Can we emerge as a manufacturing hub in the coming period? And which are the sectors basically we should look, like telecom or chemical, or which are the other sectors do you feel, sir?
I touched upon it, but the first part of the question I'll touch upon again. I think there is definitely opportunity. And I mentioned that people are looking at China with suspicion. Korean companies, Japanese companies, European companies, American companies are definitely looking at alternative sources of manufacturing. But let us not forget that India is not the only other country in the world. There are many other countries, Mexico, Vietnam, Thailand, Malaysia, Indonesia, and so many others who are also eyeing that opportunity. And I think this is where our policies, our eagerness to attract them, government willingness to go one step ahead and attract investments is what is needed. So we have a huge opportunity, but as a country, as a government, we will have to do much more than what we are doing right now to take benefit of it.
Okay, sir. Yeah, thank you.
We have one Mr. ABC. Sunil, his question is his view on it. Okay. Yeah, please go on. Okay, he's asking Sunil, what is the view on NBFC, especially the larger or the largest one where significant price erosion is witnessed?
So one clear thing is that don't look at investing in any company just because the price has fallen. There is always a reason why the prices rise and the prices fall. On NBFCs, there are various kind of NBFCs. On the fund-based NBFCs, I would say the safest NBFCs are the gold-based NBFCs. Because the underlying is gold, they will never have defaults. There might be a little bit ups and downs in terms of growth, but they will have never defaults. I think the other NBFCs, obviously, which can do slightly better are the retail-focused housing NBFCs. Again, it's more retail. Developer loans are lower. A person will try to do his best to ensure that his house is never, subject to being acquired. I think the third interesting aspect of NBFCs which can be looked at because of the valuation at which they are trading at are the vehicle financiers. And I would just put a disclaimer here that my view on commercial vehicle sales for the next 6 months is very, very dismal. There might be some defaults also. But once economic activity starts, the first sector to start would be logistics, because without that, nothing can move. So, select commercial vehicle financiers because of the valuation at which they are trading at might become interesting. I would stay away from consumer-facing NBFCs because a lot of them are unsecured personal loans. I think there is going to be delays and there is going to be massive issues. These companies borrow money short-term and lend short-term. The lending, the people to whom they have lent have got moratorium. The NBFCs don't have moratorium. They will have stress over the next 3 months in meeting their obligations. Microfinance companies would again be something which might undergo stress. The only thing is that rural India is do better than urban India. On the non-fund based NBFCs like life insurance companies, growth in March has slowed down significantly. April is going to be a washout month. I would say that there might be a correction there, and on correction they can look interesting. I would stay away right now from asset management and wealth management companies. They are good long-term stories, but in the near term, there might be a reduction in their assets and therefore profitability. So this is an overview on the entire NBFC basket.
Okay, I think Sunil will wrap it up.
Yeah, Nirav, I have another call.
Yeah,
sorry,
I told everyone earlier you have a 5:30 another CPI ka thing. Thank you, Sunil, for your enlightening views. I'm sure the participants will gain deep insights from your knowledge, and we hope to see you again somewhere. Hopefully, not in a lockdown period.
Sure. Thanks a lot. And nowadays we say namaste. So namaste.
Yeah, namaste, everyone. Thank you, sir. Thank you, everyone.
Thank you. Thanks.